Jim, everyone. Let's wait for some people to come in. Yeah. So yesterday was a massive panic day for a lot of people. Yeah, I felt a strange air of calm in the morning. Maybe it's down to where I am, in quite a nice holiday spot. Everyone's on holiday except for me. And I had some stables, so that was good. Opened some longs, and then, like an idiot, I closed them before I streamed and watched price pump away from me. Guess I should be looking at. Let's mute this. So yeah, I'll just wait for a few people to come in. I've been posting the link in Discord, in my channel, in chat, in announcements. There we go. So just wait for a few people to arrive, and then we can look at some macro stuff if that's not too boring. Nothing's really boring at the moment, isn't it? Because nobody really has a firm hold on what's happening in the markets. So exciting times, I guess. Just waiting for a few people to come in. Yeah, I guess we're not as panic-stricken as we were yesterday. So yeah, let me just dive in. Seeing as this is being recorded and quite a lot of people have watched it later, let's jump in and look at what we've got here. So I've just marked out some levels here on Bitcoin. Obviously, yesterday we smashed into this 52K level that everybody talked about on this dump, and we never got there. We've been consolidating in this kind of a, I mean, I hesitate to call it a bull flag, given how much fuckery we've seen and how much wailing and gnashing of teeth it's produced on crypto Twitter. But yeah, I mean, this is a consolidation pattern. Everyone thought we were going higher here because the weeklies look so good. The past 3 weeklies didn't happen. Instead, we've got this essentially a black swan, this Japanese carry trade unwind. The central bank in Japan decided to raise rates when nobody thought they would. And Japan obviously has the lowest rates of just about any central bank on earth, and has for a long time, which has resulted in people with deep pockets borrowing a lot of yen for zero interest, essentially free money, and then just using it to buy Japanese stocks and probably American stocks as well. And when this rate hike came in, suddenly the money wasn't free anymore, and everyone had been piling into the trade, and we've seen a massive unwind, which has been more and more convinced from what I've read this morning that this has been the main catalyst for this giant sell-off and the giant sell-off that we've seen in TradFi, in the S&P. Massive accelerated sell-off, the likes of which we haven't seen in a long time. I mean, we'd probably have to wind things back to the COVID crash to see such an exaggerated sell-off hopefully we don't see this kind of shit. I mean, everyone's been comparing it to this, but you really can't. It's not a global pandemic. It's just a big consensus trade with some people are saying like $20 trillion that's had to be unwound. So, you know, what's interesting is that we haven't seen DXY pumping. Let's just look at that quickly, which is what you would normally see in a massively risk-off environment. Let's get these. Get DXY up. So we've seen a little bounce in DXY today, but otherwise it's been coming down, which is the opposite of what you would traditionally see in a hugely risk-off recessionary environment. The economy is not looking good, is looking recessionary. There is inflation pain. Houses are too expensive. People can't buy them. Household goods have pumped, despite what Paul Krugman will tell you. But we're not seeing typical recessionary behavior with the dollar, where everybody rushes into USD. Actually, what's been happening is everybody's been rushing back. Not everybody, but big players have been rushing to buy the yen, which is why the dollar is crashing against the yen. Not something you see every day, but it's been a really fast. I mean, it doesn't look like it, but the yen's pumping because this is the USD JPY chart. If we look at JPY USD, you get the opposite picture. Giant pump in the yen after this huge secular downtrend. Maybe not secular. Well, I mean, if you wind things back 3 years, it's been a massive downtrend that seems to be reversing. So, yeah, I mean, basically, there was a great thread this morning from Jim Bianco on this carry trade. Essentially, what he's implying is that what we're seeing is a sharp move, a flash crash. As to how long it takes to resolve, we can hope that maybe this washes through the system in a short amount of time. What we don't want to see is contagion. Yeah, so he just breaks down the rate cuts, highest rates since 2008. I mean, that's a hell of a long time. This carry trade's probably been building up slowly ever since these rates have been super low. Surge in Japan's inflation drove their decision. They're also trying to control inflation, the same as the US, the same as the UK and many other countries. And the big issue is that nobody expected it. Only 29% of respondents to this Bloomberg poll expected this hike. So everyone was caught offside. Everyone who had a stake in this huge, supposedly $20 trillion carry trade. So a carry trade, just to give a quick TLDR for anyone who doesn't know what a carry trade is, you borrow an asset, in this case the yen, for very low interest, in this case pretty much 0% interest, almost free money. And then you take that free money and you buy a higher yielding asset. In this case, the Japanese stock market, and also the US stock market, where we've seen, you know, a huge sell-off in the Nikkei and a huge sell-off in the S&P and even bigger one in the Nasdaq. One way to look at this is a redirection of flows rather than a permanent, you know, hopefully not exaggerated long downtrend. This money just has to get paid back. Balance sheets have to be rectified, and then hopefully we can rebound. That's the hopium. So this is interesting. So this is the central bank's balance sheet relative to GDP, and you can see why this has been such a big deal for the Japanese yen and for the Japanese stock market, for the Nikkei, because the central bank balance sheet of Japan is 127% of GDP. So there's massive debt in Japan, and they've controlled that with yield curve control and with low interest rates. but inflation's out of control, and that regime change is coming around now. It's a big secular change. So these are ripple effects that we're seeing. Right, so get back to Bitcoin. Yeah, a bit of a waffle there. Sorry about that. But yeah, so essentially, to zoom in on Bitcoin down to the daily, we kind of need to hold this level, because below here, this is untested. So there's a good chance this will hold unless we see massive further macro sell-offs. Also, we've got big bond buybacks coming up for the US. There's liquidity hopium, which I'll go into in a minute, but this needs to hold. If it doesn't, we're looking at the low 40Ks, 43K. There's a big support air gap. You can see this just refactored massive volume node down here. We don't really want to go down there, because that's going to be a protracted mini bear market at best. So what we need to do is reclaim this level, this 57, 58K level. That's the first hurdle. That's not as big of a resistance as what we have up here. And not only this volume node, we also have the 200-day moving average. I think that's the wrong MA. Let's just change that. And put 200, 300. So the 200-day MA, for those of you that don't know, is typical bull bear line in the sand. If price on the daily is above this 200, then you can make a bullish argument for the trend below, and you're looking at a potential, I don't know, bear market type price action, downtrend essentially. It's kind of maybe it's overused, but it is what it is. And these, when you lose the 200, it often takes a little while to reclaim. You can see this is a very short deviation. We reclaimed it after about a week to 10 days. But back here, we lost it at 27K, and this took quite a bit longer. 17th of August, it's a month essentially. We were stuck under there consolidating. Eventually we pumped through it, and that was really the start of the Bitcoin bull market back in October. So yeah, that's what we need to reclaim. If we're above there, you can start making bullish arguments. Obviously, we still need to get through this big volume node at around 67K. Actually, if you look at this whole consolidation period, this is the biggest node. But if we can reclaim this, I'd be cautiously bullish. We still need to break out of this structure, which is going to require some additional liquidity, some TradFi market stability. But yeah, one step at a time. Reclaim this, and then maybe we're good. And then I just wanted to look higher time frame. One thing that's interesting is this SAM rule, which is essentially an economic indicator that looks at US employment data with some moving averages. And this gave a recession signal the last time, pretty much soon after the COVID crash, like maybe 6 or 7 weeks. People lost their jobs, people couldn't work, lockdowns happened, and this thing gave a recession signal. And bizarrely, that coincided pretty much with the start of the whole 2020, 2021 bull markets. DeFi summer, and then bull market proper, first sell-off, and then that last pump into November. That was all completely, almost perfectly correlated with recession, which is bizarre. And until you remember that everyone got helicopter money, there was massive easing, massive amounts of USD printed to address the lockdown issue and the fact that the economy went into massive deflation with people not able to work. So will that happen again? Chances we get another round of helicopter money, I think, are pretty fucking slim. But I'd be surprised if we don't see some easing in the next 1 to 2 months into the election. It happens every 4 years. They juice the economy into the election. The incumbent wants to win. Do they want to win? I don't know. They're doing some weird shit, but I assume they want to win. And also we've got, something that we briefly alluded to a minute ago. Tomorrow, the US will start $30 billion per month treasury buybacks. So, yeah, that's got to be some market juice. I don't want to go too deeply into that because I haven't really read up on it and I might talk a lot of shit. But, yeah, that's got to be... Yeah, I mean, stock buybacks, think about those. Always pump price. Treasury buybacks. Seems like some money printer action is about to kick off. And then if we want to talk about liquidity briefly, I actually put this in the newsletter today. Let me just see, is anyone actually in here? Okay, everyone knows that they can watch a recorded version now. So yeah, I put this in the newsletter today, just looking at the liquidity situation. I've been following Michael Howell's updates as well. Basically, what we have here is just a Bitcoin weekly chart with these two unlabeled metrics at the bottom. This green one is total US liquidity, net USD liquidity. And then above there in white, the PBOC liquidity injections, People's Bank of China. And then liquidity, the three main drivers are US liquidity, People's Bank of China liquidity is the other big one, and then the MOVE index. So the MOVE index in gray here overlaid with Bitcoin is something you want to see a low value. Low essentially means low bond volatility, and you can see a spike here with the recent black swan with the Japanese carry trade. So what happens when the MOVE index is low? It basically means that you can leverage up bonds as collateral to instead of, I don't know, whatever 10x, you can get 20x out of your bonds because volatility is low, and that's how you determine whether it's safe to lever up or not. So you can see as Bitcoin ran up from kind of started over here at 21K all the way up to the 74K highs, broadly this MOVE index was trending down. The spike didn't look great, but hopefully it's a flash crash kind of spike, and this carry trade stuff works itself out and we continue to trend down. Then on the more interesting, more bullish tip, let me just get my circle. You can see here with net US liquidity, we have these down spikes that happen just before you get a run up. So you basically put the low in. Let me get this, get a bit more real estate here and over here. But yeah, you get these down spikes. Another one over here. Oh, it's a bit big. And another one we've just had, which coincided lack of liquidity, dump. Lack of liquidity, dump. Lack of liquidity, consolidation. But after that, it tends to, shoot back to the median. And what this looks like to me is a little downtrend that could soon be broken to the upside. Especially given the macro situation, you can bet that there's now some pressure on the Fed to ease, which means more liquidity. Similarly, on the Chinese side, we know for a fact that Chinese are already easing. They've got deflationary, recessionary issues in China, and the People's Bank of China has already started easing. Michael Howell's reporting on this. You can subscribe to Capital Wars, go and read their Substack. There's bi-weekly or even more frequently updates on what's happening in global liquidity, which is what drives our market. We're at the far end of the risk curve. We need an excess of liquidity, as it's just a fact. You can say what you want about how good our tech is, and ultrasound money, monetary easing, hedge, whatever you want to say about us. We need liquidity because we're at the far end of the risk curve. And this came out on the 3rd, so this is reports on all the Chinese easing. TLDR, in short, the People's Bank of China must ease, and they need to ease by a lot because they've got some issues with the yuan being overvalued offshore. The currency is too strong. They need to devalue it by printing more. And they've got deflationary issues in China. So, yeah, just to look at the chart again, this looks like, over here, we saw the start of an uptrend, and bottom over here on the US side, Chinese start of the uptrend, and that's where we broke out from 25K, started the run up, and Chinese liquidity kept pumping close to where we topped out. We rolled over here, but yeah, we've got some nice Chinese liquidity. It looks like that's happening again. So yeah, that's kind of bullish. This looks like it's bottomed. We've had this consolidation and a pump, consolidation, pump, spike down, pump, spike down, pump, spike down. Let's hope. This looks like decent buyback so far. I'm still in wait and see mode. Things are still pretty uncertain. We could take a quick look now and see what TradFi is doing because the market's been open for 20 minutes now. So let's have a look at ES. Zoom into the 4-hour. Looks like it's dumping. Let's look at the VIX. VIX is not doing much, but these things can take a week, 2 weeks to play out. I mean, the last big pump was the COVID crash, so that's probably not the best example to look at because that was just a huge black swan on a global level. I think what we're dealing with is mostly US and China. But this is the 3-day chart. 2018, the VIX spike. Basically 1, 2, 3, 4, about 2 weeks. And the VIX came right down again into the chop zone. As we talked about yesterday, 3 volatility regimes in the US, like VIX from, tends to bottom at 10 up till 20 is your investable zone. 10, 15, 20 up to there. Above 20 is chop. You don't get great price action between 20 and 30 VIX. Anything above 30 is the fuck bucket. Nobody wants to own anything risky. You get a sell-off like what we've just seen. So yeah, we need this back under 30, and we're sitting right on 30 here, which is, if we don't get another spike, that'll be flash crash confirmed. That would be a shorter, VIX aberration than what you would normally see, but awesome. Hopefully, let's wait and see what happens. Interesting that it's coming down, and the S&P's not going up. What's DXY doing? It's not much. Chop, basically. All of this is going to take time to work its way through the system. This could easily come back down here to this old trend line, and we get some choppy price action before any attempt to reclaim this level. I wouldn't be surprised at all. But basically, where RSI is at, we're in the reversal zone. TradFi. If you look at, let's go back to NASDAQ. NASDAQ RSI is in the reversal zone. You can see, local bottom, local bottom, local bottom, bottom, and that's where we are now. So this long-term trend line probably going to hold. We have one deviation over here, but otherwise it's been quite a reliable log trend line. Similar on the S&P. Where's my S&P chart gone? Let's just bring it up. Use the Nasdaq. Let's see what SPX is doing. Also, in the reversal zone, you can just draw a line under all these RSI reversals that happen at the same level. This is just like a mindless technical thing that seems to work. I don't know if everyone just buys 30 RSI. If the algos know that 30 RSI is where you buy. But all these reversals line up quite nicely with that level. Recently, anyway. Yeah. So the stock's bottomed out. It could chop for a little bit here. This might chop around a bit. Maybe you get a bull div reverse. Maybe it goes lower. RSI goes higher before you actually reverse. Just got to be patient with this thing, I guess. So yeah, and then let's look at some crypto, because enough of this fucking TradFi shit. And there are very few good-looking crypto charts right now, but Aave is, for me, is still one of them. So I'm long Aave at the moment. The most lindy of, arguably, of the DeFi 1.0 protocols, fee switch coming, a bunch of other improvements all proposed. They're currently still, putting it to votes and deciding if they're actually going to do it or not. But if they look at their chart, hopefully they'll green light everything, because this is a super strong chart compared to the bloodshedding that we're seeing everywhere else. If we zoom into the daily, big spike down yesterday, 7, and we're all the way back up 25% higher today. So yeah, I've put this in the newsletter with the monthly chart, actually, because I'm super bullish on this thing over the long term. I'm keen to hold this thing for the long haul. Maybe you've seen this before, but basically I just used a really simple MA cross on this 1020 MA cross. Didn't quite cross on the way down, but it's, if it had, it would have given you this whole downtrend, and cross bullish in Jan on New Year's Day. Price hasn't really moved, but it's been coiling up. This is all compression, and I like how the last 3 monthly candles have been riding this orange MA, sitting on top of both MAs and on top of this huge high time frame volume node, this point of control. So yeah, I think bull market continuation. When we get it, I don't think it's over. I think this thing can run into next year if the broader market's supportive, new hires, and potentially much higher. Because what you're looking at is only a $1.5 billion market cap for the most lindy DeFi lending protocol. If you get TradFi onboarding using this thing, it's pretty battle tested, been through major shit. All the liquidations we saw in 2021, Luna, FTX, all that contagion, survived all of that shit. If you're a big deep pockets TradFi player, that's the kind of protocol you want to be looking at to dip your toes into the magic internet DeFi markets. Yeah, so bullish, super bullish on this. Yeah, and then is anyone actually on live? Nobody in chat. So okay, so I wanted to look at some deck screener stuff. Mog has had a good buyback. Was it Murad who said he bought like 1% of the supply? I mean, there's a huge, like, a lot of big whales dumped their Mog yesterday, and Murad and whoever else basically bought it all up. Not quite back inside this log trend, not yet. So we'll see how that plays out. I still kind of want to be in wait and see mode. And with this, on the weekly, it'll be good to see the weekly close back above this trend line. Let's see how that happens, how that plays out. But basically, Mog has this habit, again, looking at RSI, of reversing at this 37 level, over here, over here, over here. We deviated below black swan sell-off, but if we hold here and get back inside this trend line, super bullish. And this RSI behavior goes all the way back to this consolidation pattern as well. Reverse there, reverse there. So yeah, I mean, still super bullish MOG, full cycle culture coin. Once we get bull market resumption, if, when, etc. And then just looking at some other memes, I'm out of memes, but I went through the watch list. Retardia is looking good. Actually, I still have a long-term bag of Retardia that's locked up until November. So it's kind of holding this level, which is good. It's been a relatively meek drawdown, which is good to see compared to other memes. Not in compared to all markets, but on the meme tip, this is pretty chilled pullback, like 50%. Oh no, it's actually more. It's like 75 if you take that whole wick, but it got bought up instantly. And today's daily is green as well. So looking pretty decent if we can hold this level, maybe create a new consolidation over here while the rest of the market sorts itself out. Looking decent. And then Grant flagged this for me this morning in his Meal Deal channel. He's been buying Retardia cousins, so basically some NFT beta to go with your Retardia bags. And this chart looks pretty good. It looked better this morning. I've got a bit of a wick at the top now. But yeah, it looks super bullish. Bit of a head and shoulders here, but we're trying to invalidate that at the moment. Let's see what happens. But seems like good beta if you're bullish Retardia. Yeah, and then just another meme that I kind of caught my eye, pulled it out of the watch list. I don't own this, but I like the charts. Big pump yesterday. I don't know how they managed that. I don't know anything else that really pumped yesterday. I mean, this is a what, 3, 6, 2, 4, 9. That's like a 20-30% candle on a black swan day. Only a 4-hour candle, but nevertheless, that's obviously pre-US Open. And then US Open, it tries to sell off. But yeah, it looks like there's real buyer interest here. We're above the VWAP, above the point of control. Nice series of higher lows over here. RSI grinding up, holding the 50 level. It looks pretty good to me. Anything is a stock rolling over, so maybe some more consolidation here. But as long as you're holding the VWAP and this volume node, looks pretty good. Could be a good zone to stock up on this thing over here. Maybe it goes a bit lower, somewhere on there. See how that plays out. And then Zin is another interesting one. So this thing sold off pretty hard. 84 down to 13, 14. This is a log chart. So massive sell-off. But I like this range. It's relatively clean. These highs over here, marking it out, and then the volume node in the middle being the pivot. These lows at the bottom. And I like the buyback on this. I know the crypto dog's been shilling this. Who's kind of one of the good actors left on the sort of main character tip. I always liked his content and his general attitude. Not a grifter, not a scammer. I like where the RSI is at. Again, like typical reversal zone, you can draw a line under it. 35 level tends to reverse there. Didn't quite bottom there, but bottomed here with a bull div. And yeah, it looks like this thing is going to challenge the mid-range. Above here, starting to look good. Above the VWAP, looking really good. Holding above the range. I mean, this is miles away from where price is now. That's almost a 3x. But it definitely doesn't look dead. So maybe worth a small bag at these levels. Yeah, there's a few decent accounts on crypto Twitter shilling this thing. Oh yeah, and then this tweet caught my attention. Seems like they're trying to build something, take it beyond just a meme, building a consumer product that will bring attention to Zin. I don't know what that is. I don't know. I don't really know this dude. It could just be bullshit, but the price action suggests that, I don't know, someone believes it. Could be something happening. No refunds. Yeah, and then just unless there's anybody around, got some requests. Okay, we've got some people here now. GM Renko, Hecat, MDS. Enjoying VIX under 30. Yeah, good to see. Let's hope it remains there. Strong bounce from Tau. Oh, that's true. 563. Yeah, I was looking at that earlier. Let's have a quick look at Tau. Let's just use this guy here. Maxi one. Yeah, that looks decent. Let's get the volume profile going, because there's a huge volume node there. So yeah, once it's above here, it's going to look good. Once you get to like 300 and you hold that level, that's kind of what you want to see. But yeah, massive buyback. Sure. I believe you bought some under 200. That was GG, dude. Well done. Yeah, I didn't take advantage of that. But yeah, that looks like a generational entry, and yeah, unless we get a bear market, fingers crossed. Just a little volume node here, but this is the main level to close above. Where's the 200 day on this thing? Up here at 430. Yeah, so nice reversal on RSI, and the stock's turning around as well. Stochastic RSI. It looks kind of decent. This is almost a little bull div. See, RSI went lower there on that dip. So RSI is like making a lower high there, which is what you want to see. Yeah, just need this to hold. Close above here, ideally. What's the weekly look like? Let's close that. Yeah, you kind of want to invalidate this shitty head and shoulders structure. Yeah, that would be good to see. A weekly close above here, above like 380, 400 would be a nice place to see the weekly. Just from a technical level, still super bullish on Potenza fundamentals. The whole decentralized AI playbook. As soon as we get bull market resumption, it's going to be massive. What do I think of the Billy daily chart? Oh, and Nom Nom. Okay, let's have a look at Billy quickly. I haven't looked at Billy in a while. Sure, so this thing nuked all the way back to this main volume node here. I mean, this is where a lot of people got in. I suppose you had your initial pump up to 0.86, then big pullback. Yeah, I don't know. It doesn't look good. Obviously, high time frame support here. I can't speak to who owns this thing and who's shilling it, but you need some big accounts to shill this to bring it back to life. Yeah, I mean, the highs are at 23 cents, and we nuked till 4. Okay, so yeah, maybe that's just a standard meme pullback. If we look at the log chart, it looks better. You kind of want to see it above the VWAP. I mean, I always say this with memes, but this yearly VWAP tends to matter. That's where you can start making bullish arguments. And then you've got another resistance at 12 cents. So let's just mark that out for future reference. It's another hurdle you need to clear. This VWAP on this level, obviously that's almost a 3x from here. So if you have any insider intel into what's going on with who owns the supply, who's shilling, who's buying, what wallets are holding it, then yeah, then you know more than me. But doesn't look great down here. Yeah, Zin looks interesting. If I want to get back into memes, I'd be looking at the Zin chart and maybe a few others. I'm kind of out of small cap memes, so I'm not really too clued up on that playing field at the moment. But once majors look better, I'll definitely start paying more attention. So let's look at Nom Nom quickly. I'm not familiar with that. Let's just watch list that. Okay, big pullback on that as well. Let's block chart that, make it look healthier. There you go. And get some volume profile going. Dial up the resolution on that. Yeah, it doesn't look too bad. There's some resistance there, but nice buyback, wicked all the way down to 1 cent, and it's up like 3x or 4x from there. So sure, good going if you bought down here. Let's get a hold on the VWAP, see where that is. Switch on, switches to year. Obviously, it's quite a new chart, only a couple months old. But with the yearly VWAP, it'll just default to the highest time frame available. So probably the quarterly in this case. So yeah, above this volume node and above the VWAP, you can make bullish arguments. But it looks decent. Like this is obviously a level. Let's zoom in a bit more. This was obviously a level to kind of hold, which so far it has. It'll look better when this candle's closed, which it will tomorrow, I think. So yeah, if you can consolidate here and then reclaim the VWAP, go higher from there, then yeah, could be in a good spot. 3.8 million market cap. So I mean, what often tends to happen, this market cap actually went way higher, didn't it? Oh, okay, so this went to like 15 million and then corrected. I mean, that's often what happens, hey. Like here's where it went to 3 million, corrected, 3x, 5x from there to 15, corrected. So yeah, it didn't look too bad. What looks awful? What, Nom Nom? No, dude, it looks okay. What looks awful? Billy looks fucking awful, that's for sure. Let's have a look at Miggles again for the Baron. Baron's still holding this thing. Yeah, this looks horrendous. Redraw that. It's better. Yeah, just down only. Looks like it wants to fully retrace, but maybe not. Yeah, it's maybe it's trying to reverse here. Some strength coming in on the RSI. Yeah. Okay, I'm probably going to leave it there, guys. That's like 45 minutes. Yeah, and I'll catch you all tomorrow. We're going to do these 5 days a week, basically. I was chatting to Alex earlier, talking about maybe making the Monday and Friday ones public, and then keeping the other 3 days for meal deal subscribers. But it's all up in the air at the moment. Still figuring it out. Thanks for coming by, and chat to you all later. Cheers, guys.